Hi folks, Gettess here with the Market Sense. Welcome to 2016. This is for the week of January 5th to be exact. And I'm still using the Trade Navigator software because it's the best thing for me. And here's a weekly bond market chart. And the first thing I'd like to point out is, can anybody point out on this chart where the Fed raised rates? I mean, you might think it come right up here at the top, but that's not true. They actually raised rates down in here. The close the day before they raised rates is about a point above where they are now. And they're not really doing much. The way they broke down here last week, it kind of looked like they might be down here in the 152.04 area, but instead they've held above 53.12 and gone up to the 155 area here. Now, that might be acting as resistance, and they could still go lower. But, they're kind of surprisingly quiet, especially considering what's happened in stocks. And I suppose we could look at it that way. The big crack in stocks would have caused a rally ordinarily, but they've been rather quiet. This is the week of all of the employment data, however, and so therefore we have to consider that the 156.24 area up here or or maybe down below 148 are still possible. That's an exaggeration. I don't expect to see that, but we do have a lot of employment data and kind of a little bit thin conditions, seems like, first week back, so moves might be exacerbated a little bit. Stocks had a huge gap down right away Sunday night, Monday morning, and it caused them to just briefly poke below these lows here just by 3 points and then turn back up. That could be significant. On the other hand, this here in the middle of the chart, that's the entire range for last year. It took place in about 4.5 weeks there, and an impressive rally back up off of that did not go to new highs and could possibly be rolling over here. So, kind of mixed signals. A quick marginal break in recovery is positive. The kind of rolling over nature here doesn't look positive. Mixed signals, hard to tell what's going on. And again, the volume's a little light and the employment data is coming out for Wednesday, Thursday, Friday combined. Getting back above the 2,000 area here, which is this lower moving average, is kind of positive, and they've closed both days above it, so things might be good. Resistance is around 2033. Like to see them get back there intraday this week and see how they behave. So far, they haven't gotten there since making the low, and that doesn't look real good. On the other hand, if they love the employment data, and I have no idea what would make them love it, but the upper moving average here is around 2070, so plenty of upside possibility. But this is just fascinating. Again, the potential for a rebound because of that margin new low, the potential to roll over because of this big picture pattern. Heck, I'm going to sit and watch like everybody else to see what happens. So that's what we've got for you today. I hope you can find something profitable to get yourself into, and I certainly hope you have a great 2000.